Hey traders, welcome back. Today we're breaking down the volume profile, the most effective tool for finding levels that actually matter. Volume profile is a histogram of volume traded at each price level. The peak, called the point of control, is the price where the most trading happened. That price is where institutions transacted, and it becomes the strongest support or resistance level on your chart. Here's a live example. SPY today, 2026-05-28. Look at the right side of the chart. The horizontal bars stacked there are the volume profile. Each bar shows how much volume traded at that price level. The longest bar, the peak, is at 754.50. That's today's point of control. More shares traded at those 754.50 than any other price today. That level is now your most important support and resistance for tomorrow. Here's why the point of control matters more than any other level on your chart. Step 1. When a lot of volume trades at one price, it's not random. It's because institutions, hedge funds, market makers, prop desks are quietly filling huge orders right there. They picked that price for a reason. Maybe a key level on a higher time frame. Maybe an algorithm trigger. Whatever the reason, they committed real capital at that price. Step 2. Once their order is filled, they walk away. The buying or selling pressure stops. Price drifts wherever the next trader pushes it. That POC is now sitting on the chart like a magnet. Every institution that transacted there has a position. If they bought, they're now underwater the moment price drops. If they sold, they're underwater the moment price rises. Step 3. When price comes back to that POC level, those institutions react. They have options. They can add to their position, buy more if they were buyers, sell more if they were sellers. That defense creates support or resistance. Or they can scale out, exit at break even. That exit creates the bounce or rejection you see on the chart. Either way, the POC acts as a magnet. Price gets pulled to it, then reacts off it. That's why the POC is the single most important price level on your chart. It's not based on opinion. It's based on the actual transactions of the biggest players in the market. Once you start marking POs on your chart, you'll see them act as levels again and again. Here's a real example from 2 weeks ago, SPY May 14. On that single trading session, the point of control formed at $748. That's the price where the most volume traded all day across 13 separate 30-minute bars. If you anchored a volume profile to just May 14, the peak bar sits exactly at 748. Now watch what happens next. Over the following week, SPY drifts lower, closes at 740 on May 15, closes at 737 on May 18, reaches a low near 731 on May 19. 5 sessions, drifting away from the May 14 POC. Then on May 22, something interesting happens. Price starts climbing back up. 500 bar by bar, SPY pushes higher into the mid-740s. Then right at 748, the May 14 POC, it stops, tested the level, could not break above, started reversing. The next trading session, May 26, SPY closed at $750.47. That's a clean bounce off the POC. Anyone who shorted right at 748 with a tight stop $1 above got a clean $2 reversal trade. Anyone who bought the bounce off the POC support got a profitable long. Both work. The POC is bidirectional. It just respects the level, and price respects it back. Let me show you the same pattern, a different week. SPY May 6. Single session point of control formed at $733.50. Heavy volume traded right there throughout the day. Institutions positioning at that price. Over the next 4 sessions, SPY drifts lower. Closes at 731 on May 7, 729 on May 8, 725 on May 11. Buyers step back, sellers stepped in. Standard pullback. Then on May 12, something familiar happens. Price starts climbing back up. By midday, SPY taps right at the May 6 OC level, $733.50. Same exact reaction we saw on May 22, bounce higher close. The next session, May 13, SPY closed at $742.30, almost $10 higher than the POC bounce. Anyone who longed off that POC level got a clean trade. 2 for 2. The peaky level keeps acting as support just like we predicted. This isn't coincidence, it's the same mechanic playing out week after week in the same market. Third example, same SPY but a different week, May 1. Single session POs formed at $722.50. Big volume traded right around that level all day, institutions building positions. Then SPY drifts down for the next several sessions. Closes at 720 on May 2, 717 on May 4. Standard pullback into the value area. 4 sessions later, on May 5, SPY tests the May 1 POC level on the day's low. Touches 722.50, holds. Buyers step in. The next session closes at $733.77. 3 PE bounces in a row on 3 separate pays, all in the last month of trading. This isn't cherry-picked. I scanned every single session in the last 30 days, and the POC retests consistently bounced when the broader market was ranging. The rule keeps working because the mechanic underneath it is always the same. Institutions transact at price levels. Their transactions become support and resistance. When price returns, the institutions react. That reaction is your trade. But the rule doesn't always work, and I want to show you a clean recent failure so you understand when to skip. SPY, May 13. Single session POC formed at $742.50. Same setup as the wins we just saw. Heavy volume at the level. 2 sessions later, May 15. SPY tests the May 13 PO, tags 742.50. But instead of bouncing, price keeps going. Breaks below the POC. Closes the session at $738.56. If you bought the bounce expecting POC support, you got stopped out for a $4 loss. The technical signal was identical to the May 14 and May 6 winners. Same anchored PO, same retest pattern, same heavy volume at the level. So what went wrong? Context. On May 13 through 15, the broader market was in a strong directional move down. The May 22 winner happened when the market was ranging sideways. Trending markets blow through POCs. Ranging markets respect them. That's the filter, and that's why we add the daily context check before every POCs trade. Now let me zoom out and show you the bigger picture. Same chart, but I've anchored the volume profile across the entire last month of trading. 21 trading sessions, all the volume aggregated. The 30-day point of control is at 737.00. That's the price the entire month of SPY gravitated to. The biggest magnet on the chart. Notice how price keeps coming back to this level. Closes near it. Tests it, returns to it. That's because 30 days of institutional positioning all happen near that price. Daily POCs are your tactical levels for swing trades within the week. The anchored POC is the strategic level, the bigger magnet that pulls price over weeks, not days. Pro tip, use the anchored POC to identify your higher time frame bias. If today's price is well above the anchored POC, market is in distribution. Sell rallies. If today's price is well below the anchored POC, market is in accumulation. Buy dips, and if today's price is right at the anchored POC, expect chop and ranging conditions, perfect for POCs trades. Here's the filter. Only trade a point of control test when the broader market is ranging. What does ranging mean? Pull back to the daily chart on whatever ticker you're trading. Look at the last 20 sessions. Is price oscillating between a clear high and a clear low? That's ranging. Is price making clean higher highs and higher lows day after day? That's trending up. Is price making clean lower highs and lower lows? Trending down. POCs only work in ranging conditions. If the daily chart is in a strong directional trend, POCs get blown through. That's exactly what happened to SPY on May 15. The market was breaking down hard, and the POC at 742 couldn't hold against that pressure. But when the market is sideways, ranging between two clear levels, POs work beautifully. That's what made May 14th, May 6th, and May 1st all bounce cleanly. Check the daily chart before every POC trade. Range. Take the trade. Trend against you. Skip it. The simplest way to check is the 50-day moving average. If price is hugging the 50-day moving average, the market is ranging. Take P trades. If price is far from the 50-day moving average and clearly trending, one filter, one check. That's it. Your playbook. 5 steps. Print this and stick it next to your monitor. Step 1. At the end of every trading day, mark yesterday's session point of control on your favorite ticker. On TradingView, drop an anchored volume profile from yesterday's open to yesterday's close. The peak bar is your POC. Draw a horizontal line at that price. Step 2. Check the daily chart to confirm we're in a ranging market, not a strong directional trend. If the price is making clean higher highs or lower lows over the past 5 sessions, the trend will steamroll your post trade. Skip it. Step 3. Wait. Don't enter just because price approaches the POC. Wait for price to actually reach the POC level. Sit on your hands. Set a price alert if you have to. Step 4. Entry triggers when price tags the POC and prints a clear reversal candle. A bullish engulfing if you're long, a bearish engulfing if you're short. Don't enter on the touch alone. Wait for the candle to confirm the reaction. Step 5. Stop loss is 0.3% past the POC on the opposite side of your entry. Tight stop. Target the opposite side of the value area. VH if you're long, VL if you're short. That gives you a clean 2 to 3 times risk reward on every trade. One rule, one filter, 5 steps. Repeat every single trading day. The edge compounds. Let me wrap this up with the one sentence and a few homework items. The point of control is where institutions transacted. It becomes the strongest level on your chart. Only trade post tests when the broader market is ranging, not when it's trending strongly in either direction. Your homework before the next session. Open your favorite ticker. Drop an anchored volume profile from yesterday's open to yesterday's close. Find the peak bar. Mark the price. Draw a horizontal line there. Tomorrow, watch what price does when it gets near that level. You'll see the magnet effect in real time. Drop a comment below with the ticker and the POC level you're watching. I'll feature the best setups in the next video so you can see how the community is using this rule live. If you found this useful, drop a like. It tells the algorithm to push this video to other traders who need it. Subscribe to catch the next setup the moment we publish. Catch you next video.